Hi, this is Liqian Ren, Director of Modern Alpha Wisdom Tree ETFs. Welcome to China of Tomorrow podcast series, where we navigate China, India, Japan, and the broad emerging markets with members of Wisdom Tree and other industry leaders. Today is July 8th, 2024, and today I'm going to explain some of the operations that the People's Bank of China, which is China's central bank, has done last week, which probably surprised, I wouldn't say surprised, but I want to use this example. Actually, the interest rate is slightly higher in China now, and which is, I think, very difficult for people outside China to understand. Like, the economy is weak, while China is, the central bank is actually making operations that increase the rate a little bit. I'll go into the concerns and what's driving this kind of decision, and hopefully this is a good example that people can understand how some of the decision-making process works, economic decision-making process works in China. So first, the fact, I think PBOC, including the Governor Pound, has said many times they don't want to see the long-term rate to go under certain undefined rates, like a 2.3%, maybe 2.5%. The reason is because the economy is pretty weak and a lot of people are risk averse and just want to buy these bonds, and also financial institutions as well. And the government bonds, the yield got pushed down. And PBOC, first we can, discuss whether the reason I put forward is a good reason, but I think one of the reasons PBOC did these really unconventional things is because it's tasked to maintain exchange rate stability, and it didn't want the interest rate to go down too much to open up the gap between US-China rate differential, which will put the pressure on even more capital leaving China, so put pressure on China's exchange rate. The second reason is that a lot of Chinese banks, relies on this interest rate differential to make money, and in the lower rate environment, the profitability of these banks are under even higher pressure. So sometimes you will think that, why would China even, do these kind of operations, which is not necessarily good for the economy, right? So that is where I think China's, if people have been following me or listening to this podcast, probably have, realized that since last year, we've been on this baseline that China is unlikely to do significant stimulus, but it will do things to stabilize things. And I think right now, PBOC, because it's tasked to maintain exchange rate stability and also to prevent the systematic risk of the financial system. So it is doing things that it tries to establish credibility, and it does, it does. But then usually if you do these kind of operations, you prefer the Ministry of Finance, which is the part that spends money, to come up with a little bit more stimulus, to hedge off these kind of operations, because these kind of operations are, putting downward pressure on the economy, right? But I think it's still ahead, and that is a good sign to see that even though PBOC itself has established credibility, but it does hurt the credibility of the whole monetary policy, which means it requires coordination between departments, and requires someone taking charge and make a decision that's for overall economy, not just for exchange rate or the financial system. And that is somewhat lacking, and I think it shouldn't be too surprising given China's political system, because under this kind of top-down system, each department is very, they try to do what they want to do the thing that looks good for them, but they don't necessarily do the things that overall is good. So I think it is already well known that China's fiscal policy and monetary policy are not very coordinated, and this is another example which I think it's a little bit extreme, but for me, I'm not surprised because this has been the case in the last couple, I would say since the beginning of last year, and I expect this to continue somewhat. So I think this, even though this is quite a technical aspect, but from this technical episode, you can try to, I think you can infer a lot of things happening in China. So on the other hand, I think when the negative, when the sentiment gets too negative again, then the China's, they call it the national team, essentially the state-owned capital market holders, they will likely step in to support the market. I think that is also should be expected. So I think yes, these are quite negative in terms of expectation, in particular because I think the market has been kind of positive on the possible stimulus coming, right? Even though I myself is I'm not on the camp. I've always maintained that I don't think there will, I don't think it's good to put too much high optimism on the July political meeting coming. But I do think the overall, if it becomes extremely negative, the so-called national team will step in to support the market. So I think that still is a good headline. It's still a good baseline to use for when you try to measure what's going on in China. The second, I think on the side thing is actually China's export and the manufacturing, high-end manufacturing. Those areas are still doing relatively well. It's just, the housing market slowdown has a significant impact. So the other investment has not been big enough to counter this housing market slowdown. So I think that is still a baseline for us. In the short term, before July 15th to July 18th, the actual third plenum of the party, Central Party Committee meeting, I think interestingly, I noticed that it's the same time that the U.S. Republican Party nomination will be. So it's very interesting. China's party is also having this important political meeting which focuses on economic policy, versus the Republican nomination dates are exactly over. I think I've been asked by a couple of people to comment how the U.S. presidential election is going to impact on China. I think the overall baseline is still the same, regardless who gets elected in the U.S. Its actual China policy is unlikely to change as much. But on the other hand, President Trump is definitely a little bit unpredictable because he's had a couple really I wouldn't say shocking, but unconventional headlines from President Trump, like such as like 60% tariffs on China. So I think a lot of people in China, they are anxiously waiting on what the U.S. presidential election outcome could be. Even though the baseline, the China-U.S. competition, tech competition, U.S. continued containment on China, call it containment or de-risking, it still continues. I think these baselines are still a good baseline to know, but day to day, or each month to month, I think there's still significant risk in this whole process between now and the end of the year. The third thing is, in terms of currency, again, we've mentioned many times in China, a lot of currency hedging for us is to reduce the risk. I think for China, currency stability is still overall goal of the PBOC, and PBOC does establish the credibility, like it's even willing to let the interest rate go up a little bit to maintain that. So I think it does have the credibility. So I think on that front, that's also a good headline. But on the other hand, there's a significant carry you can earn from the interest rate differential. The U.S. short-term rate is close to 5, China is close to 2. So then you can earn 3% carry by currency hedging. So that's still quite favorable. So I think that likely continue until China is going to try to maintain this until U.S. moves. Now, whether U.S. moves in September, I think we have our in-house and Professor Siegel who's had comments. I think it's getting closer on those days. But between now and then, when the U.S. started cutting rates, China, even though the natural thing to do is probably cutting interest rates, but it's still trying to maintain this until the pressure of U.S. high rates is off a little bit. So I think that is the domestic and the international background for why PBOC made these really unconventional moves last week. And I think hopefully people are starting to understand like some of the policy making process is quite different in China versus in the US, but it does has a certain logic behind it. So it's not completely random. If you understand what's driving, what is the China's central bank's goal and how decisions got made in China, it's actually not difficult to see these kind of things happening. So hopefully this gives you a glimpse of China's political and policy making process. And I think next, the third plenum on July 15th and 18th definitely will be event to watch. And I will also keep tab on it and then talk about it in the next episode. Thank you.